Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings. Today we're diving into a report from Adicet Bio. Don't worry, it's not as boring as it sounds, maybe a little. We're talking about potential new medicines and of course the money behind them. Adicet Bio just released their latest update and there are a few key things we need to understand. First, how much money are they spending on research and development, or R&D? Second, how close are they to actually getting new treatments approved? And finally, do they have enough cash to keep going? We are here to find out the answer to those questions. Dip before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Please join us. First off, what is this report anyway? This is a Form 8K, a current report companies file with the Securities and Exchange Commission or SEC to announce major events. Think of it as a corporate news flash. This one tells us about their recent financial results for the quarter that ended in March. This report is dated May 6, 2025, which means it's pretty recent. That's important because it gives us a snapshot of where the company stands right now around that time. All right, let's get to the meat of the report, the financials. Adicet Bio announced their financial results for the quarter ended March 31, 2025. They put out a press release and filed it with the SEC. A press release is an official statement given to newspapers, TV stations, and other news media. We also see something called exhibits. These are extra documents attached to the report. In this case, there's a press release. We'll focus on that because it likely contains the important financial numbers. Now let's move on to look at the press release exhibit for some key figures. The press release starts with some exciting news about upcoming presentations at a medical conference, Accession. They're sharing new data on their experimental treatments for cancer and lymphoma. Basically, they will show what they have been working on recently in an event. This is big because positive data can boost investor or attract partnerships. They are talking about their cash runway, which means how long they can keep the lights on with the money they currently have. They believe they have enough cash to last into 2027. That is always a good thing because they can continue their research without worrying about running out of money in the short term. This is an important factor for the company's stability and future expansion of business and research. Here's the big one. Adicet had about $330 million in cash equivalents, and investments as of March. That sounds like a lot, but it depends on how fast they're spending it. The company had a net loss of $37.4 million for the quarter. Net loss means the company lost money. It is the amount of losses after calculating the revenues. That's a pretty big loss, but it's not unusual for biotech companies that are investing heavily in research. Here's the reason the company is losing money. They spent $32.1 million on research and development, or R&D. R&D means the company is investing heavily to bring its research to the market. This is where they're putting their money to develop new therapies, and these costs include things like clinical trial expenses and salaries for scientists. This number is the reason the company has a negative net income. They also spent $6.4 million on general and administrative expenses, or G&A. This covers the costs of running the company, like salaries for executives, legal fees, and rent. Looking at these results more broadly, Adicet appears to be in a solid position for a biotech company at this stage. They have a good amount of cash, which gives them runway to continue developing their treatments. However, the company is still losing money every quarter and the clock is ticking. The company has to show real progress to get its products approved before its cash runs out in order to be sustainable. A potential opportunity for them would be to seek partnerships with bigger pharmaceutical companies to help fund their research. This could bring more money and help them speed things up. Also, the biotech industry is extremely competitive, so Adicet needs to stay ahead of the curve and keep its eye on the market. Alright, that's our breakdown of Adicet's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.